Choosing the right business insurance is not about buying the most expensive policy or copying what another business owner did. One wrong choice can leave you underinsured, overpaying, or completely unprotected when a real problem hits. In this video, you will learn how to choose the right business insurance with 3 practical steps. Step 1. Understand your business risks clearly. The first and most important step in choosing the right business insurance is understanding your actual business risks. Insurance is not one size fits all. The risks of a home-based online business are very different from a construction company, restaurant, or consulting firm. If you skip this step, you will either buy coverage you do not need or miss coverage that can seriously hurt you later. Start by looking at how your business operates day to day. Ask yourself simple but critical questions. Do customers visit your location? Do you visit client locations? Do you sell physical products or digital services? Do you have employees? Do you use vehicles for business purposes? Each answer points to a specific type of risk. For example, customer visits increase liability risk. Employees increase workers' compensation risk. Vehicles increase commercial auto risk. Next, identify your biggest financial threats. Think about what could realistically cause major losses. A customer injury, property damage, data breach, lawsuit, fire, theft, or professional mistake. Many small business owners underestimate these risks because they have never experienced them. But insurance is meant for rare, high-impact events, not everyday problems. Then review legal and contract requirements. In the US, some insurance is legally required depending on your state and business type. Workers' compensation is required in most states if you have employees. Commercial auto insurance is required if you use vehicles. Landlords, clients, or partners may also require proof of general liability or professional liability insurance before working with you. Consider your risk tolerance. Some businesses prefer higher deductibles and lower premiums. Others want maximum protection, even if it costs more. There is no right or wrong choice here, but you must be honest about what your business can afford to lose without insurance. When you clearly understand your risks, insurance stops feeling confusing. You are no longer guessing. You are building coverage around real problems your business could face, which makes every next step much easier and smarter. Step 2. Choose the right types of coverage. Once you understand your business risks, the next step is selecting the right types of insurance coverage. This is where many business owners get overwhelmed because there are so many policy names. The key is to focus on protection, not labels. Start with general liability insurance. This is the foundation for most businesses. It protects you if someone is injured at your business, if you damage someone else's property, or if you face basic lawsuits. For many small businesses, this is the first and most essential policy. Next, consider professional liability insurance, also called errors and omissions insurance. If your business provides advice, services, consulting, coaching, or any professional work, this coverage is critical. It protects you if a client claims your mistake caused them financial loss, even if the claim is not true. If you have employees, workers' compensation insurance is usually required by law. It covers medical costs and lost wages if an employee gets injured on the job. Skipping this can lead to heavy fines and serious legal trouble. For businesses that use vehicles, commercial auto insurance is necessary. Personal auto insurance often does not cover accidents that happen during business use. This is a common and expensive mistake. If you own or lease physical space, equipment, or inventory, you should look at commercial property insurance. It protects against losses from fire, theft, vandalism, and certain natural disasters. Cyber liability insurance is becoming more important even for small businesses. If you store customer data, accept online payments, or use digital systems, this coverage helps protect against data breaches and cyber attacks. Many insurers offer a business owner's policy, also known as a BOP. This bundles general liability and property insurance at a lower cost, making it a smart option for many small businesses. The goal is not to buy every policy available. The goal is to match coverage directly to the risks you identified earlier, so your protection is practical, affordable, and effective. Remember that insurance should grow with your business. What works today may not be enough tomorrow. Start with essential coverage, then expand as your revenue, clients, and responsibilities increase. The right insurance plan protects not only your business assets, but also your reputation, cash flow, and long-term stability. Step 3. Compare policies, costs, and providers smartly. The final step in choosing the right business insurance is comparing policies, costs, and insurance providers the right way. Many business owners focus only on the premium, but the cheapest policy can become the most expensive mistake if it does not pay when you need it. Start by comparing coverage details, not just price. Look closely at coverage limits, deductibles, exclusions, and claim conditions. A low premium often means lower coverage limits or more exclusions. Make sure the policy actually covers the risks you identified in step 1. Next, check the insurer's reputation and financial strength. In the US, choose insurance companies with strong financial ratings and a solid history of paying claims. You want an insurer that will still be stable years from now when a claim happens. Online reviews from other business owners can also reveal how claims are handled in real life. Work with licensed insurance agents or brokers who specialize in business insurance. A good agent does not just sell policies. They ask questions, explain options clearly, and help you avoid gaps in coverage. Independent brokers are especially useful because they can compare multiple insurers instead of pushing one company. Review policy terms carefully before signing. Pay attention to what is not covered. Common exclusions include certain lawsuits, cyber incidents, employee actions, or specific industries. If something is unclear, ask for a written explanation. Once you buy a policy, do not forget about it. Review your business insurance at least once a year or whenever your business changes. Hiring employees, adding services, increasing revenue, or moving locations can all affect your insurance needs. Choosing the right business insurance is not a one-time decision. It is an ongoing process that protects your business, your income, and your peace of mind. When you understand your risks, choose the right coverage, and compare policies wisely, insurance becomes a powerful safety net instead of a confusing expense.